the profit available is 50,000. But it is not at all 50,000, though the dividend is declared, which has not been deducted from the profit and loss account. How many shares are there? 1,500 shares are there. Totally, we have got 2,000 shares. Out of that 1,500 acquired, the profit which is available in the adjustment is 50,000 before declaration of the dividend. Dividend has been declared on paid up capital 2 lakh is 30,000. Hello, my dear students. I am Dr. B.S. Subramanya. Call my name Dr. B.S.S. Professor in Commerce and Management, Vidhyaashram First Aid College, a Temple of Excellence, MYSURU. We'll go through the problem now. Following is the balance sheet of H Limited and its subsidiary S Limited on 31/3/2014. So it starts from 1/4/2013 to 31/3/2014. Which is the date? April to March, which is called the financial, start from 1/4/2013 to 31/3/2014. This is a balance sheet of H Limited, the balance sheet of S Limited. Go through this now. Here, general reserve on 1/4 is there, beginning of the year is there, profit and loss account is there, creditor is there. So come by existing goodwill already there, fixed asset, stock, debtor, investment, how many shares they have taken? 1,500 share bank. So 60,000, 25,000 is there. This is a balance sheet of H Limited, which is subsidiary S Limited. On which date? 31/3/2. Date is most important. 31/3/2014. Start from 1/4/2013 to 31/3/2014. We'll move on. The profit and loss account of S Limited showed a balance of 50,000 beginning of the day on 1/4/2013. At the beginning, we have got 1/4/2013. A dividend of 15% was paid in January 2014. Actually, dividend belongs to last year. A dividend 15% was paid in January 2014 for last year. So last year dividend has been paid in the current year, means last year dividend is not deducted from the profit and loss account. We mean to say that, so their dividend is declared, but the dividend is not at all deducted from the profit and loss account. The dividend was credited by H Limited to its profit and loss account of H Limited. Acquired the share on 1st October 2013. So H Limited acquired on which date? 1st October 2013. Your date starts from, how the date starts from? 1/4/2013 to 31/3/2014. So which date was 1st October? That means April, May, June, July, August, September. 1st October means after 6 months it is acquired. How many shares acquired? That is 1,500 shares. Then, included in the creditors of S Limited is rupees 20,000 for goods supplied by H Limited. Who supplied now? H Limited supplied the goods to S Limited. S Limited become the debtor. H Limited becomes the creditor before the consolidation. Who supplied? H Limited supplied the goods to S Limited. Who is the taker? H Limited is the giver. S Limited has to pay the money. So S becomes the debtor. H becomes the creditor. Included in stock of S Limited are goods to the value of rupees 8,000. For 20,000, there is a profit of stock of rupees 8,000, which were supplied by at a profit of 33 1/3%, 1/4. So 1/3 on cost. I will explain this. Prepare the consolidated balance sheet of H Limited on 31/3/2014. So we'll move on slowly. First ratio you can calculate. Total number of shares in S Limited. Total number of shares in S Limited. Come back here. 2 lakh divided by 100. 2,000 shares. So, out of which 1,500 shares acquired by H Limited. The balance $500 share goes to S Limited. Therefore, H is to S, 1,500 is to 500. Cancel the 0. 5 3s are 5. So they are in the ratio of 3:1. The total number of shares in S Limited is 2,000, out of which 1,500 share acquired by H Limited. The balance 500 share goes to minority S Limited. So they are in the ratio of H is to S, 1,500 is to 500. So they are in the ratio of 3:1. This is the first step, ratio. Then there is a wording here, 15% profit was paid, has been credited to HL. So last year dividend was not paid. Whatever the profit available is not the real profit. So dividend of the last year based on the calculation on the capital. The capital is how much? 2 lakh. Dividend 2 lakh into 15 by 100. This is 30,000. So, real profit at the beginning $50,000 minus 30,000 is equal to 20,000. As per the problem, the profit available is 50,000, but it is not at all 50,000, though the dividend is declared, which has not been deducted from the profit and loss account. They are showing how much money, 50,000, how much dividend to be paid, 30. Along with the share, dividend also goes to shareholder. If we purchase the share, along with the share, the dividend also goes in favor of the shareholder. 30,000 will go. What is the profit available? Only 20,000 at the beginning of the year. This most one. So dividend should be calculated on paid up capital. What's your paid up capital is 2 lakh. 15 by 100 is 30,000. Real profit at the beginning is 50,000 minus 30,000 is 20,000. Then, if you see the question now, the profit and loss account is 90,000 is there. At the end of the year is 90,000. But at the beginning of the year, profit at the end, 90,000 is there. Profit at the end, 90,000 minus profit at the beginning, profit at the beginning is 20,000, balance is 70,000. So even end of the year profit is 90,000. Beginning is how much? 20,000. What is the profit of the year is 70,000. But out of 70,000, acquired after, this is on 1/4/2013 to 1st October 2013. This is 6 months. Another 6 months. This is capital profit. This is revenue profit. So 6 months profit, 70,000 into 6 by 12, 35,000. This is your capital profit. Another 35,000 is the revenue profit. I think you understand. The total profit is 90,000. At the beginning of the year, we have got 20,000. Balance is 70,000. They acquire after 6 months. Out of 70,000, 35,000 goes to capital profit. Another 35,000 goes to revenue profit. Therefore, total capital profit 20,000 at the beginning plus 35,000. 55,000 is the capital profit. This is your capital profit. Revenue profit, the balance is another 35,000. So your capital profit is 55,000. Your revenue profit is 35,000. Totally, if you add now, it is 90,000 of the profit. So this goes in favor of it. I will repeat. You got 90,000. After deducting the dividend, you have got 20,000. 90,000 minus 20,000 is 70,000 is the profit. You acquired after 6 months. That is 1st October. 1st October to 31st March, revenue profit. So first 6 months is the capital profit. Another 6 months is the revenue profit. So 6 months, half of that, 35,000 goes in favor of capital profit. Another 35,000 goes in favor of revenue profit. So total capital profit is at the beginning 20 plus 35 is 55,000. Revenue profit is another 35,000. So this one side is gone. Then regarding the reserve, if you see that general reserve is 1460 is there, end of the year is there now. Whatever the reserve available is called capital reserve. Reserve available in balance sheet as on 142 is capital reserve. What's your capital reserve now? 60,000. No revenue reserve. So entire, it is called capital reserve. This is capital profit. This is revenue profit. This is capital reserve. This should be shared in the ratio of 3:1. We'll explain once again. The profit which is available in the adjustment is 50,000 before declaration of the dividend. Dividend has been declared on paid up capital 2 lakh is 30,000. 50 minus 30,000 I worked out here. 50 minus 30,000 is 20,000 at the beginning of the year. At the end of the year, you got 90,000. At the beginning of the year, you got 20,000. Profit during the year is 70,000. But you acquire on 1st October, means after 6 months, out of 70,000 profit during the year, 6 months profit is capital profit, another 6 months profit is revenue profit. What I divided? So 35,000 is the capital profit, another 35,000 is the revenue profit. So total capital profit goes to beginning of the year 20 plus 35 is 55,000, revenue profit, that is totally revenue profit is 35,000. Reserve available is only on 1/4 beginning of the year. That's why it's called capital reserve. So entire end of the year reserve is not given. So the entire amount goes in favor of capital reserve. Now we'll move on. Now you have to do particularly this capital and revenue. Capital and revenue. Total shares, $2,000 shares, 1,500 acquired by H Limited, 500 share goes to minority. So they are in the ratio of 3:1. So 500 into 100, this is 50,000. Yes, Limited. 500 in 100 is 50,000. Now, You already done your capital profit is how much? 55,000. Your revenue profit is 35,000. Capital profit 55,000. Share it in the ratio of 3 by 4. 55,000 into 3 divided by 4. 41,250. Then 55,000 into 1 divided by 4. 13,750. This goes in favor of capital profit. Then revenue profit. What's your revenue profit? See that? Your revenue profit is 35,000. Share it. 35,000 into 3 divided by 4. So 26,250. Then 1 by 4. 35,000 into 1 divided by 4. 8,750. Then capital reserve, entire reserve available in the balance sheet is capital reserve. What's the capital reserve? We already shown 60,000. 3 by 4 of this 45,000. This is 15,000. Add this. This is 8,750 plus 15,000 plus 13,750 plus 50,000 is equal to 87,500. This is minority interest. So total share is 2,000, acquired by H Limited 1,500, 500 goes to S Limited, 500 100 is 50,000. Capital profit as per calculation is 55,000. 3 by 4 is 41,250. 13,070. Revenue profit is 35,000. 26,250 goes to H Limited. 8,750 goes to S Limited. Capital reserve entire, because the date is on 1/4/2013. Entire is a capital reserve, 60,000. 45,000 goes to H Limited, 15,000. If we add this now, it will come, minority amount will be 87,500. This will come on the liability side of the balance sheet. We already calculated this. Now, once you calculate, you have already calculated the capital reserve is already over. Then, you have to calculate minority interest, you have already calculated. Then, you calculation of goodwill or capital reserve. Calculation of goodwill or capital reserve. Particulars. Cost of investment by H Limited. If you go to the balance sheet, you understand. Here, what is the cost of for 1,500 share? 2,40,000 minus face value. How many shares they have taken? 1,500 into rupees 100. This is 1,50,000. Actually, they have to pay 1,50,000, but they paid how much money? 2,40,000. How much excess paid? 90,000. This is your goodwill. You can say new goodwill. If we say that you have got an existing goodwill is there, see that in the balance sheet. You have got an existing bill 40 plus 30 plus existing goodwill. $70,000. It become 1,60,000. This is as per the calculation method. So 1,60,000 is there now. Then minus capital profit. If we see that how much capital profit is there, your capital profit is 41,250. 41,250 minus capital reserve. See that capital reserve is 45,000 minus dividend 30,000 into 3/4. So 22,500. Add 22,500 plus 45,000 plus 41,250, 1,08,750. Deduct 1,60,000, 160 followed by 30 minus 108,750 is equal to 51,250. This is the goodwill, which will appear on the asset side of the balance sheet. 51,000. So the cost of investment is 2,40,000. Real value is only 1,50,000. New goodwill work out 90,000. Existing goodwill is 70,000. It become 1,60,000. Capital profit is 41,250 as per calculation. Capital reserve is 45. Along with the dividend also transferred to the shareholder to the extent of 3/4 because they purchasing only 1,500 shares. Minority does not come. Only holding company 3,000 and 3/4 is 22,500. So your capital profit will come 1,08,050. Your goodwill is 1,60,000. Which is more? Goodwill is more to the extent of 51,250, which will come on the asset side of the balance sheet. Now, come back to your calculation of unrealized profit. 33 1/3%. In accountancy, 1/3 on cost. Here we know that we know that 33 1/3 is nothing but 1/3 of 100. 1/3 of 100. The law says 1/3 on cost is equal to 1/4 on sale. This one formula. Or 1/4 on cost is equal to 1/5 on sale. Here, 4 is the selling price, 1 is the profit, 3 is the cost price. Or 3 is the cost price, 1 is the profit, 4 is the selling price. I will repeat. 4 is the invoice price, 1 is the profit, 3 is the cost price. Or 3 is the cost price, 1 is the profit, 1/4 is the sale. So here 1/4. So 8,000 is there. 8,000 into 1/4 is 2,000. Means he supplied how many goods? 20,000 goods to H. Before the consolidation, H Limited supplied how much goods? 20,000 goods at a profit totally as a stock 8,000, which includes the profit of how much? 2,000. When they become one and the same, the question of profit does not arise at all. Before that, H is the supplier, S is the receiver, H becomes the creditor, S becomes the debtor. When they become consolidated, when they become one and the same, the question of profit does not arise at all. They are one and the same. So that the profit should not be taken into account. The 2,000, this should be deduct from stock and deduct from profit and loss. It's a loss to holding company. Who supplied? H Limited supplied about, I will repeat now, 20,000. If you see the problem, you understand. Here, H Limited included in stock of Limited 20,000 goods, which a profit of 80,000. For 20,000, H Limited becomes the creditor, S Limited becomes the debtor, and goods have been sold at 8,000, which a profit of 2,000. When they become one and the same, the question of profit does not arise between the H Limited and the S Limited. Before that, they are quite different. Now they are each other. They become the friends. They have become the one and the same company. H Limited take over the S Limited. Yes, join with the H Limited. They become the one and the same. The question of profit does not arise at all. So that the profit of 2,000 should be deducted from the stock, from the profit and loss account while you are doing the balance sheet. So this should be understand. 1/3 on cost is 1/4 on sale. 1/4 on cost is 1/4 on sale. So 33 is 1/3. 8,000 1/3 2,000 rupees. 2,000 deduct from stock and deduct from profit and loss account. That's the way. Now we'll go to balance sheet now. Shareholders fund. Share capital of H Limited. See the board. What is the share capital of H Limited? 5 lakh is there. Share. This is the share capital of H Limited. Then we'll go with the general reserve. What is the general reserve you got? Here, 1/4. So entire reserve is on 1/4 is a capital reserve. So entire profit goes to balance sheet. This is capital reserve. General reserve 1 lakh. This is capital reserve. Minus, it becomes 1. Entire becomes the capital reserve. Then, because the reserve available on 1/4 means it is a capital reserve, there is no revenue reserve at all. Entire capital reserve is 1 lakh. Then, profit and loss account. See that what's the profit and loss account in the balance sheet? 1,40,000 plus revenue profit. See the working note. What's the revenue profit? 26,250 and 1,66,250 minus dividend. You already calculated. Dividend is 22,500 minus 22,500 minus unrealized profit 2,000. So 1,66,000, that is 3/4 of 30,000. 22,500 minus 2,000 unrealized profit. 1,66,250 minus 22,500 minus 2,000. 1,41,750. This is. Then minority interest. 87,500. This is your minority interest. Long-term loan. Any long-term loan is there? Balance sheet. Debenture like this? No. Then come back to current liabilities. Then current liability. Creditor H Limited. S Limited. Creditor H Limited is 80,000 plus 50,000. Creditor H 80,000 plus 50,000 minus mutual. This is 1,30,000 minus mutual 20,000. So 80,000, 50,000 minus mutual is 20,000. This is 1,10,000. Regarding the BP is accepted. What's the BP is accepted? 40,000. 40,000. Assets. So if you add this figure now, 5 lakh plus 1 lakh plus 1,41,750 plus 87,500 plus 1,50,000. 9,79,250. 9,79,250. This goes total. 9,79,250. Now assets. Fixed assets. This total. 3,60,000 plus 2,20,000. 3,60,000 plus 2,20,000. Goodwill 51,250. Add both here. So it comes to 5,80,000 plus 51,250. 5 lakh plus 6,31,250. 6,31,250. Investment, there is no investment at all. Then come back to current asset. Stock 1 lakh plus 90, 1,90,000. Stock 1 lakh plus 90,000 minus unrealized stock 2,000. So 1,90,000, 2,000 goes to 1,88,000. Then 20,000 plus 75,000, 20,000 plus 75,000 minus mutual 20,000 plus 75,000 minus mutual 20,000 gone. So it is 75,000. Then we have got bank, cash at bank 60,000 plus 25,000. So 85,000. That cost of investment should not be taken. So we'll add the figure 6,31,250 plus 6,31,250 plus 1,88,000 plus 75,000 plus 9,79,250. It will tally 9,79,250. So once again I will explain in detail. How many shares are there? 1,500 shares are there. Totally we have got 2,000 shares. Out of that 1,500 acquired. So the minority goes to 1. That is total number of shares is 2,000. How much acquired by H Limited is 1,500, how much goes to minority? 500 share. So they are in the ratio of 1,500 to 3:1. The dividend which have been declared is credited to P&L account has been not utilized. So 2 lakh into 15 by 100 is 30,000. Present profit is 50,000 minus dividend is 30,000. The balance is 20,000. Profit at the end as per the balance sheet is 90,000 minus profit at the beginning is 20,000. Balance is 70,000. So you acquire after 6 months. First 6 months is the capital profit. Next 6 months is the revenue profit is considered. So the total profit is 20,000 at the beginning, 35,000 is the capital profit, totally become 55,000. Revenue profit is 35,000. Reserve available in balance sheet is 1,400, means entire is called capital reserve. We say entire is called capital reserve. Total share 2,000, 1,500 is 500 is 50,000. Capital profit is 55,000. So 3 by 4 into 1 by 4, it will come 41,250, 13,750. The revenue profit is 35,000. Share in the ratio of 3:1. 3 by 4 is 26,250, 8,750. The capital reserve available is 60,000. 3 by 4 is 45,000, 15,000. If we add this figure, it becomes 87,500. 87,500 is a minority interest that will come on the liability side of the balance sheet. Then come back here. Calculation goodwill or capital reserve. You paid for the 1,500 share. How much money you have paid? 2,40,000 you have been paid. Minus face value 1,500 is only 1,50,000 is there. So how much excess you paid? 90,000 is the new goodwill. Already existing in the balance sheet 70,000. Totally it become 1,60,000. Either the goodwill or the capital profit, capital reserve, whichever is more should become on the balance sheet. If the capital reserve is more, it will come on the liability side of the balance sheet. If the goodwill is more, it will come on the asset side of the balance. Capital reserve will come under reserve and surplus. Goodwill come under fixed assets, intangible asset. If you see that 1,60,000, your capital profit is 41,250, your capital reserve is 45,000, your dividend is 22,500, your totally capital profit is 1,08,750. Out of 1,60,000, 1,08,750 gone, no. Excess is called goodwill, 51,250. It will come on the asset side of the balance sheet. Then we know that this is 33, 1 by 3%. Is nothing but 1/3 of 100. So 1/3 on cost is equal to 1/4 on sale. 1/4 on cost is 1/5 on sale. So you got 8,000, which includes the profit. 1 by 4 is 2,000. Deduct 2,000 from the stock, 2,000 from the profit and loss account. Then share capital as per the balance sheet 500. Reserve available is a capital reserve 1 lakh. Your profit and loss account as per the balance sheet is 1,40,000. Add the revenue profit 26,250. It become 1,66,250 minus dividend 22,500 minus unrealized profit on the stock is there 2,000. It will come 1,41,700. Minority interest is 87,500 as per the calculation. Then current liability creditor 80,000 plus 50,000, 1 lakh. There is a mutual H limited supplied how many goods? 20,000. Before consolidation, it's a mutual adjustment. 20,000. It will come 1,20,000. BP accepted. The entire BP have been discounted. That's why BR won't come on the asset side of the balance sheet. 40,000. Totally, it will tally for 9,79,250. Come back to asset side. Fixed asset H limited 3,60,000, S limited 2,20,000, and the goodwill is 51,250. If you add all this, no, 6,31,250. There is no investment at all. Come back here. Current asset stock H limited 1 lakh, S limited 90. It is 1,90,000. Unrealized profit is 2,000. It becomes 1,88,000. Debtor of H limited 20,000, 75,000 minus mutual adjustment 20,000. It becomes 75,000. Cash at bank before consolidations, H limited has 60,000, S limited has 25,000. Both combined together, it becomes 85,000. So the total balance sheet will tally for how much money? 9,79,250. So very good problem this. When I compare to last problem, this problem is really good because dividend is there, so that should be deducted. 3/4, that is a point, no? So while you are along with the share, the dividend also goes, no? You must be very, very careful about this. Hope you understand this. We have solved about the 5 problems are there. So this problem includes the dividend, is a very important problem. I explained detailedly. Go through in the home. If you have got a doubt, you can ask and make a comment in the YouTube. We'll get the answer for that. Hope you understand. Thank you. Thank you once again. We'll meet in next session with another good problem. Till then, goodbye. Meet in the next class.